You are watching part 2 of my buy trigger of 20 key stocks that we speak about on this family investment channel. So stick with me in part 2 and I will share you the buy triggers on the opportunistic month of July onwards for 2021. Welcome back to Family Investment. My name is Alex Ko and now you're watching part 2 where I'll give you 10 of my favorite key stocks that I would personally buy myself. But before I begin, a couple of house rules. Remember, this is for guidance. This is using Fibonacci retracement tool without valuation because the earnings season is in a couple of weeks away. So these are the layers and levels which traders and professional people look at, know when to buy and when to sell. And this invisible layers actually helps me in my investment, and I just want to share that with you. So before this video begins, please do give me an early click like and subscribe. Help me to grow my channel because I'm trying very hard to spread this great news with everyone, so it helps you improve your investment game. And if you want to join me on Discord and also on my Patreon, feel free, I'll leave the link below. Okay, don't waste time. Let's get back to the next 10 stock. And the first one I want to bring to you is Adobe, one of my favorite key mega cap stocks. And if anybody asks me, if I don't like Facebook, I don't like Apple, I don't like Google, what do I buy? Adobe. Adobe, if you realize on this Fibonacci retracement chart here, it has broken levels like never before. It's been quietly seeking up. So it has been trying at about 500 for quite some time, for at least 6 to 9 months. And now the next thing is breaking to 600. I mean, it's already a 3, 4, 500 billion company, and now it's breaking up higher. It's a triple breaker. I call this like a triple breaker. And now it's heading to a point waiting to drop. Will it drop? If it drops, 57. But depending, waiting for earnings. Remember, Adobe earnings, Adobe are not at the point where there's still the mega cap growth, 20 to 30% revenue growth. I think they're dipped below 10%, 10-12%. But the cost control, the dominance for the software, it is unparalleled, unrivaled. So I think Adobe will be here for some time to run. And if you do hold Adobe, if you're existing Adobe shareholders, don't sell the stocks. But if you... Now for the third stock, PayPal. We don't speak about JP Morgan, we don't speak Morgan Stanley, we want to speak about PayPal, we don't want to speak about Square. Because PayPal is a very diversified type e-commerce, e-payment stock. And it's one of those, if it does go up, it does go up. And if this business expands to Europe, it will do very, very well. So I speak about PayPal very often, but I see it trying to reach all-time high, hitting the 306. It's trying to pull back. It's trying to establish itself. So it's going up too fast, too quick. So people are taking profits, waiting for the pullback. So if you want to top up on PayPal, 277 is my first buy trigger. And the second one is 259, a second buy trigger. But I think it will be breaking out eventually for 2022, 23 onwards. Because the earnings will not be great. You're not going to expect a 15, 20, 30% growth. I think PayPal is around about between a 10 and 15% growth just now. And with its expansion capability of more user tools and expanding to the likes of Europe and South America, that's what I really want to see. It's not easy expanding, but hopefully PayPal can be resilient enough to expand quicker, and therefore it push the share price higher. But for now, it's trying to recollect itself, and if you can top up on that buy trigger point, those are the ones for you. Okay, next one, very popular Chinese stock, NIO. Everybody speaks about NIO. Lots of young people buy NIO for a very good reason, because Tesla has rocketed and NIO is the next big thing that will help you propel your wealth through electric vehicle stocks. Okay, so NIO, like I said before, it's gone way beyond up, about 53, and I did say on my previous sell trigger to take some profit, and now it's dropping back down. Now sitting about 46, 47, I think there's a potential it might drop to 41 if we see a bit more push on the sell-off here. So 41 might be my buy trigger if you top up, because there's really no point buying at 46 just now. It's at the limbo point, it's quite too high. And why do you want to buy at the point it's too high? And I know expansion coming out, I know earnings coming out, but it's still not selling 100,000 cars a month. So wait for it to pull back to 41 bucks per share, 41, 42, and then start topping out. If it does drop 36, then start topping out. That's the way you buy stocks. You want to buy in huge volume, but buy the right price, because if you wait for this buy trigger, you could buy extra few other stock that you can. So that's me for NIO. Next, Twilio. Twilio, I always want to speak about Twilio. I'm not sure how many of you own Twilio. I don't own Twilio, but I wish I did own Twilio, because I cannot buy every stock on the market. But Twilio is one of those that will make the next person a millionaire if you own like 1,000, 2,000 of Twilio stocks here. Because I think Twilio will be one of the next big cap stock. It might be the next Adobe, it might be the next CRM. So Twilio here, it's trying to reach trying all-time high, but it's stopping at second level, just like 38. So that's a good buy trigger point, but I'll wait at 346, sorry. 346 bucks. I'll wait for it to pull back down because there's gaps to fill. So it pulls back 346, I think it's time to buy, because if you miss this opportunity, it's going to start rocketing up again. So Twilio is one of the stocks that you just cycle, and it will cycle to a point where it's going to break out even higher, because the business is growing. The business chart is growing. Growth revenue is the perfect American company on a perfect American revenue growth. So Twilio is one of those that's quiet, it's not exciting, but when it grows, it grows. It's going to look like the next Adobe, and don't miss this train. If you miss Adobe, Twilio might be the one for you. Next one, Shopify. Shopify, I speak about it every time I draw a straight line up. It's a straight line up chart, but it's going to take a long straight line, because Shopify is one of the stocks that has gone so fast, so quick. But we have buy trigger points that we can adhere to. So the next buy trigger point is 334. It's already broken, trying to go all-time high, but potentially if anything goes drastically wrong, a huge mega sell-off, Shopify will be one of the first to fall. 334 will be a good point to buy, entry point. And some folks say 446 is a good entry point, but no, I think I'll wait 334, because look at the characteristic, they always go in cycle ups. So wait for the pullback 334. Will it drop to 120? Less likely. So 1,247 is a point where I would buy my next Shopify buy-in if you have not started Shopify, or if you want to top up on your Shopify holdings. The next stock is Alibaba. Okay, I've spoken about Alibaba. Alibaba doesn't seem to be moving. So a lot of folks who own Alibaba has given up Alibaba and moved to SEA Limited or NIO. But I think Alibaba has still got room to run, but you need to give it time. It's a company that is still there. It's got Ant Financial that's going on in the background. So Alibaba is at a point where it is still falling, and the buy trigger point is 212, but potentially it could drop to 181. So with the regulation in place, with pressing regulators, the government pushing it to comply as much as it can to be more transparent, you might drop to 181. So if you buy Alibaba at 221, if you've been buying at 212, I mean, hang on, stop buying until it falls to the next buy trigger 181. Be patient. You just have to hold, and if it does go up, it will go up really slowly as well. So this is the buy trigger point for Alibaba. You just have to hold and be careful. But if you are a bit impatient, if you want to risk transfer, you know, there are other stocks like the likes of SEA Limited that you can transfer to, a Medicarby, or you know, you can go to the likes of PayPal. But the choice is yours. That's what's great about retail investing. You can make your own choice. Okay, next we want to speak about VuZIX, the 3D augmented reality glasses that's used for industry. I wish they use it for gaming. I don't know why they're not doing it. But let's look at the chart itself, okay? So it's got this feature of the pumped and the damped. But it's still a good quality stocks. But sitting at 17 bucks, it's a fair zone. You know, it's good. It's a good buy trigger zone just now. It might drop to the likes of 14, but I think it's between the buffer zone of a good buy. And it needs quarters of good earnings, good expansion, good collaboration companies. So we're just waiting for earnings to push it even higher. The earnings seems to be trying to break even, but it's not breaking even very, very well. So this is a good zone. 18 bucks, between 14 to 18 bucks is a good zone to buy VuZIX. It's one of those you have to wait for at least 5-6 years before you see it really capitalizing, really establishing towards the beyond $30 mark. So that's me on VuZIX. The next one I want to speak about is Nano, a company that's not making money, but so much scope, so much potential. I've made money swinging these stocks, and I've lost money swinging this stock at the same time. So Nano is sitting between the buffer zone of 6 bucks to 8.50. It's overvalued because it's not making money, and the CEO has already said don't expect to see staggering, smashing quarters for the next at least 1 to 2 years. So now it's just cycling, it's just recycling between 6 bucks to 8 bucks. I mean, if I were you, I'll be buying the bottom, selling the top, buying at 6.50, selling at 8.50 until we see more prominent real. Because at the moment, Nano is only focusing on prototyping. It's not focusing on huge, large manufacturing. So let's see where it goes. And it looks like it's a company without debt that's trying to buy out other companies expand. So this is where we are. That's the buffer zone, 6.50 and 8.50. For Nano. And the last one I want to speak about is Plug Power. It's one of this pump and dump, great potential company. I saw this company at 10-12 bucks, and I really see good potential, but it went up too high too quick, and people pumped, and now it's dumped. Now it's on a return back down to earth. So when it was at 18 bucks, it was a good buy zone. 18, it will be my first buy trigger, and if you want to wait to 31, I think 31 is a bit too expensive. It's trying to establish itself. The earnings is not there to sustain it at 31 bucks. So the lower that you can go to the 18 to $20 zone, that's where I'll buy and top up Plug Power if you're holding Plug Power and trying to average down. So be patient, wait for it to pull down. We just need real concrete news before we see it go beyond the $40 again. But again, a very highly volatile, again, a future ESG type stock. So Plug Power is something that if you're young folks, if you're 24, 25, 26, 27, and if you're owning Plug Power, great stock to own, great stock to hold for the long run, but you just have to be very absolute patient with it. So this is my buy trigger. I hope it helps you and make a decision for future. There was an error on my memory card, so I missed one stock. So the final stock that I want to speak about is OKTA. It's a cybersecurity stock. So if you miss CrowdStrike, OKTA possibly is a stock you can get. It's 40x, it's quite high, but I think OKTA is one of those side by side with CrowdStrike, because you know it's not just OKTA, it's net as well as CrowdStrike. So I'm looking at OKTA's chart here. So OKTA is actually looking at 250. It's actually looking at my first buying opportunity, my first buy trigger 250. But if you can be patient, you can wait it drop to 226 where OKTA is. But because they're all waiting to break out, these stocks are waiting to break out with earnings coming up, they'll be doing very, very well. No reason why these cybersecurity stocks gonna do well. Subscription base is increasing, the demand is increasing. Look day by day on the news. So 250 might be the last vote. If it does dip for some bizarre reason in July because people are taking profit, then take the opportunity to buy some cybersecurity stocks, and OKTA should be one in your portfolio if you miss CrowdStrike or the other. So this is me on OKTA. It's my final one, which I'm giving you opportunity to choose between CrowdStrike, OKTA, even NET, cybersecurity stocks. But if not, there's always a UK one called Dark Trace as well, which I've been buying for my kids. So this is me on the last stock. I hope you find this useful, and then get back to the video. So thank you very much. This is me on my part 2, 20 stocks I rambled through, and hopefully you can go back and repeat and choose on the timeline to see what are the buy trigger points. Remember, all these invisible buy trigger points is as guidance, but these are strangely the levels that traders and investors use to buy and sell on the options. And these are the levels that I use myself. Sometimes they break below, sometimes they break above. But all in all, good quality stocks are here to stay. And these 20 stocks are the good quality ones that I pick personally, that I would buy if I had plenty of money, but I've only a handful of them. So thank you very much. Hope to see you soon. Like and subscribe. If you want more, you can join me on Discord to chat. There are other folks that can help you out. Or if you can join me on Patreon and I'll help you one-on-one, try on my best basis. But other than that, have a good day, have a good weekend, and see you soon.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!